I believe that central banks went off their mission, essentially, which is to see to it that money has some value. In other words, your paper money, that it doesn't depreciate, that it's a store of value, and that it is a reliable unit of account. And somewhere in the 1980s, that mission got lost in the boom of assets, because as they eased the monetary policies, and I have to explain here, the central bank's easy monetary policies were kind of forced upon them by growing fiscal deficits. The government, they can have deficits, but in order to cover the deficits, the fiscal deficits, they ought to increase taxation. Okay. So your personal income tax goes up and the sales tax in the department stores goes up, but these are visible taxes and individuals don't like to be taxed. This is one of the human natures. They don't like to pay taxes. But if the tax is invisible, and let's face it, that inflation is a tax. It arises because fiscal deficits are financed by money printing. So all the years of essentially deficit financing and all the years of asset appreciation were inflationary, but it was an inflation that the public likes. In other words, when home prices go up, they like it. They don't like it forever, because as home prices go up and as commercial properties go up in value, eventually rents also go up. And that is something that the majority doesn't like, because the rental expenditures is paid by the majority that doesn't own commercial properties. Is a minority that own a lot of commercial properties, and even home prices is not obvious that it's beneficial. But initially, people liked it, this asset inflation. And the portfolio managers all applauded the central bankers, because portfolio managers get paid by the appreciation of the assets. In other words, you manage $1 million, it goes up by 20% per annum. Every year, the asset grows, and therefore also your fees. This is, of course, applauded by the financial community, and the bonuses go up. So the financial community is actually also guilty in the sense that they encourage and tolerated irresponsible monetary policies. But I would say, especially after the first financial crisis in 2000, 2002, the Federal Reserve in America, the Fed, they kept interest rates artificially low, and they deliberately produced housing bubble. That was a deliberate action, supported by Keynesian like Paul Krugman, and also Bernanke said, if home prices go up, we can postpone the problems and so forth. So they kept interest rates artificially low. And we had this gigantic housing bubble with low quality credit, subprime lending and so forth. Then it collapsed and led to the great financial crisis of 2008, 2009. And after that, the Fed doubled down and kept interest rates near zero. And in Europe, the geniuses at the ECB went into negative interest rates, you understand? And that was really a colossal mistake, especially since they kept these zero interest rates and below zero interest rates at those artificially low levels for far too long. They should have, maybe for a year, I could understand, they would have said, we want to kind of solve the financial crisis and so forth. But it's not the solution, it just postpones everything. And now, when inflation, you see, inflation is a very complex issue, because when stocks go up, people will say it's a bull market. When the property market goes up, they say it's a bull market. But when the price of carrots and potatoes and fish and meat goes up, they say it's inflation. Yes, it's consumer price inflation. The other is an asset inflation. But in character, both are the same and both are undesirable, because the asset inflation produces a generation of people who cannot afford to buy properties. unless they leverage, to the hilt. In other words, they borrow 90%, 95%, or even 100%. So these were monetary mistakes that occurred. And because interest rates were at zero, it encouraged people to have zombie companies. You understand? If you borrow at 10% per annum, you have to achieve a profit of, say, 12 or 15% or 20% to make a deal out of it. But if your cost of financing is zero, you don't need to show a profit for years. You can keep on postponing it. So that created a lot of misallocations of capital. And that, I think, it was the mistake that could have been avoided. But, in a bubble, the Fed prints money and the people are applauding it. Nobody's critical. They have a wealth effect. Everybody becomes a billionaire. I knew people in the mid-80s, they thought the debt growth in America is unsustainable and that the whole thing will collapse. You look at Argentina and you look at Turkey. Turkey has an inflation rate of, say, 80%. And if you and I go on a romantic walk on the on the side of the Bosporus in Istanbul, life is normal. You wouldn't notice that they have 80% inflation. And this is one of the concerns I have at the present time. Okay, the Fed has increased interest rates, but the last time inflation was as high as it is now was in 1973-74. And by then, say, they didn't have what we call today the Fed fund rate. They used essentially the prime rate, the lending rate, but it was at 12%. The 10 years Treasury bond was over 9% at the time. And now the Treasury, the 10 years, is at less than 4%, about 3.5%. So inflation adjusted, the reality is that interest rates are still far too low. Inflation rate is, say, I don't know, each household has a different inflation rate, but it is between, say, 6% minimum to 12%. The cost of living increases. Yesterday, I saw the cost of living increases in Europe, in the EU, for food up 15%. You understand, this is a social issue because the rich people say, I consider myself reasonably fortunate. Whether the cost of rice or of beef or pork goes up 20% or not is not a factor in my overall expenditures. But for a family in the low income brackets, I can tell you they all suffer. And I've maintained this for years, that the standards of living of the lower classes had gone down compared to their parents. And that young people today, inflation adjusted, earn less than when their parents were 35 years old, and they have less money than their parents had when they were 35 years old. We have statistics, this is not my invention, produced by the Federal Reserve in America. Except the Federal Reserve board members, they don't look at these statistics. They're busy polishing their images and giving speeches and forecasting and playing the political game and so forth. They don't understand. Recently, a Fed governor, the head of the San Francisco Fed, said, yeah, there's inflation, but it doesn't touch me. They're not ordinary people, you understand? They all drive around in limousines and have bodyguards and so forth and so on, and protected homes. But ordinary people, they suffer. And that I'm sure also in Australia, if you go to the workers, their wages have gone up, but not to the same extent that the cost of living has gone up. So in other words, if you measure truly an economy according to the standards of living, we are all in recession because the wages have gone up less than the rate of inflation. And then people who have borrowed money at variable rates, it depends if you borrow money for 50 years at 2% is one thing. But if your mortgage is adjusted every month according to the Reserve Bank rate or to the Fed fund rate, then now interest rates are going up. It squeezes households. We could see more social unrest, but you understand, the public has become fearful of the government. It's a tyranny of incompetent bureaucrats. And we've seen this incompetence in regard to COVID. Up to a few years ago, people were quite critical when you sent them an email and asked them about something, and also in discussions. Now, people shut up. They're scared. What I discussed with a friend of mine who is a private banker in Switzerland, I said to him, how is it that people in banks don't fight all these additional requirements that are imposed by these retarded and dumb, stupid compliance people in the various banking commission and Securities and Exchange Commission? All these regulations are completely useless, but they bother the clients with it. Some of my private bankers and so forth, they tell me half the time is filling out forms. When I started to work for White Weld in 1970 in America, then I came to Hong Kong in 73, and I've lived in Asia since then. Both at White Weld and later at Drexel Burnham, where I worked, I could open an account with one sheet of paper this size, A4. The client had to sign at the bottom here, and the account was open. No passport, no questions asked, nothing. Later, when they wanted to trade for options, they had to say another form and down here. And nowadays, you get like a booklet. They thick papers to open an account. A normal person, I have studied, but I'm not a lawyer. I wouldn't understand this. And to read this would take me a month. Do you think I have a time to read for a month? And so I asked my friend, how is it that the staff of the banks don't oppose all these new regulations? He said to me, Mark, it's very simple. The bank staff, they all are paid a salary. As we know, bankers, all of them are overpaid. Some are grossly overpaid and some are less overpaid. But the reality compared to, say, a small business owner, whether it's a plumber or a carpenter or whatnot, he will never make the money a banker makes. But they are employees and they get a high salary, relatively speaking, with no responsibility because they can have their money somewhere else. If the bank goes bankrupt, they get their pensions. Their number one ambition is not to get fired. So they shut up. And the whole bureaucratic system is built nowadays on people shutting up. It's like the smaller bureaucrats at the bottom. They think their bosses up there are complete idiots, but they will never voice an opinion because they depend on the bosses up there to promote them. And it is true in the bureaucracy, the higher you go, the more the people become stupid. Looking at the Fed, they are now concerned that increasing interest rates too much would have a negative impact on some sectors of the economy, in particular at the present time on commercial real estate. There's a huge sector in the market, shopping centers and office buildings, hotels and so forth and so on. And this has been financed by regional banks, and the regional banks are not in a good shape. So they are reluctant to increase interest rates too sharply, which they should do according to the rate of inflation we have. And by increasing a little bit, the system will adopt. In other words, say inflation is 6%, then the unions will go and say, we want to have a wage increase of 6%. Okay, all agreed is fair. Or they should get 8% or 9%. But anyway, they get an increase. But then the wage cost goes up and the entrepreneur, the businesses, whether it's BHP or Rio or whatever it is, they will then increase the prices by those increase in labor costs. And they will also increase prices according to the increased cost of interest payments, because they have large borrowings. So it's the way inflation becomes endemic in the system. So here we are as investors, and then you ask yourself, the question is no more how do I make the most money? The question among asset holders is how do I lose the least? I believe, I'm old-fashioned in this respect. I think the best is probably to own gold, silver, and platinum, physical. Other things that do better from time to time than gold, because gold doesn't produce anything. A corporation like Microsoft has a cash flow and so forth. But in a period where you want to preserve money, the value of your money, you can only increase the quantity of gold, silver, and platinum to a very limited extent. You can increase the printing of money to an unlimited extent. You understand? The government can issue more and more paper. As an investor, you understand, there are some young people, there's medium-aged people, old people. Every person has a different risk profile. For instance, if my portfolio goes down by 10%, I don't have sleepless nights, but some people have. So my advice, as a general advice, at all times, you should be diversified. You should have some real estate and some stocks, some precious metals. If you like art, buy by all means some art and collectibles and so forth. And the young people, they like bitcoins and cryptocurrencies and so forth. Some have, I guess, the concept has value. Whether all these, the problem is not Bitcoin. The problem is competing currencies. So the supply of competing cryptocurrencies can grow and grow. And there are some issues with cryptocurrencies. And the issue would be in the case that our friendly governments, democratically elected, decide to shut down the internet for the population. Well, is it possible to lock in people? In the 5,000 years of human history, nobody has been this stupid to lock in people. But our democratically elected officials who travel to Davos then tell the world, we're all in favor of democracies and of freedom, and we have to fight these ugly Russians because they're anti-freedom and so forth. These people, they locked down the population, and the population sat there and didn't do a thing. Except a few Australians, they went to the street, but you saw yourself what happened with them. They were beaten up by the police, by the friendly policemen, because the policemen were told, if you don't beat them up, you don't get the promotion. I think the bureaucracy is the worst leadership we can have in any system, because no bureaucrat is responsible. They will always say, I have to search you at the airport. Sorry, but this is my order. I have to do it. I don't like to do it, but I have to do it. I have to look for your nail clipper and for your eye drops. The bottle is this big. That I have to do it because I've been told by the Prime Minister.